Hi, my name is Shanika McIntosh. I am with the Spark of Hudson. The Spark of Hudson is a learning and community development hub in Hudson, New York. Since January, we've been doing a series of virtual programming for our community in Hudson and beyond. We are really lucky and happy to have been able to present what we have so far and look forward to continuing to grow with our collaborations and partnerships. If you are interested in Spark of Hudson's mission and potentially other programs that we have, just go to sparkofhudson.org or visit our Instagram, Spark of Hudson, for updates on what we will be offering. Thank you for joining us for Frank Finances for Creative Professionals, which is a workshop with Stella Graham of Stella Graham Tax Office in collaboration and partnership with the Hudson River Exchange. I'm going to introduce Hudson River Exchange, Stella Yoon. The Hudson River Exchange is inspired by the Hudson River's history of bringing people together, ideas, and commerce. Hudson River Exchange is building an economic ecosystem for the community of Hudson Valley creative entrepreneurs. Based in Hudson, New York, Hudson River Exchange offers an online shop where local makers sell their wares, as well as a microloan program that gives them the financial support that is crucial to the growth of their business. 5% of all online sales are contributed to the fund, allowing it to become self-sustaining as it grows. It is my pleasure to introduce Stella Yoon of Hudson River Exchange.
Thanks, Shanika, and thanks, Spark of Hudson. I know that I think that taxes and money is something that is a subject that I personally have had a very fraught relationship with. So when Shanika and I started talking about possible topics and what we could, what Hudson River Exchange could contribute, I kind of thought of, it's a month or so before taxes are due, and it's just a stressful time. And I think that a part of, our mission, or like something that's kind of a part of the mission of Hudson River Exchange in bringing attention to this microloan program that we started, is really how, money is fuel. It's a tool, and I just want to have more conversations, more frank conversations around money, and lessen the fear around it, and think of it more as a resource rather than something that we fear. And I've known Stella since my beginning days in Hudson, and she's an incredible entrepreneurial person, and I've known her through and seen her through many iterations of different ventures, and I'm so excited that she's offering tax services. I can't think of a more dynamic, kind person to talk through some of these very stressful topics. So yeah, I'm gonna hand it over to you.
Thank you so much. Good evening, everybody. So, in the process of becoming a business, the things that I find that jump out the most at most people is, will I be successful? And that couples with, and how much money am I gonna have to give the government, right? Those are always the two things that kind of volley back and forth in your mind when you're thinking about starting a business. And for some people, they don't even want to really start a business. They just rather be freelance, or they'd rather do gigs, which has become the gig economy, which is all of it is still business at the end of the day. No matter what iteration you choose to identify with in the string of a business, anytime you decide to take money for services rendered, you're operating as a business. So with that being said, we think about the three things that make the most sense in a business, right? That is the structure, that is the taxes, the tax bracket, and the way the tax works with you. And it's also the bookkeeping, right? The record keeping. How are you able to keep all this stuff virtually legible so that when it's time to pass it on to the government, you can do that in a way that's seamless and transparent, and with all the things in play that you've done for the year. So businesses aren't really any different from a household. They usually have some things in it that make it work. I know in a household, everyone knows that you have to pay utilities and you have to, you have to clean. And in this sense, a business's cleaning is actually the bookkeeping, keeping those books clean, keeping those books on point, keeping those books relevant and, up to the time. Sometimes even pre-predicting some of the things that may come around is a healthy business. Now, I don't want anyone to be afraid of me saying that when I say that you don't have to worry about having QuickBooks. Not everyone can afford QuickBooks. Not everyone is able to savvy enough to be on the computer, when they're also creating, to be sitting there and going through QuickBooks and entering numbers and going into things. That doesn't necessarily mean that you're not a good record keeper. It just means that you have a different style. If we go back to a time of like House on the Prairie, they did it by ledger. So the IRS states that you can keep records in any format you choose, digitally, by hand. Even if you're taking cash in, you don't have to necessarily go through it saying, no, pay me with a check so I can record it. You can take cash and you can record it in the same way you would for a check. So I would say that for anybody starting a business, keep in mind your structure, your record keeping, and most importantly, that you can actually make money are the key things in keeping any business going. And businesses open and close. So you may close one part of the business, but decide you want to relaunch in a different way with a different piece of the business. That's also healthy. And so those are all the things that I think about when I think about all the iterations like Christina mentioned, like Stella mentioned, of me having a business. Is that the iterations change, but for the most part, I kept the same systems throughout all of them. Did anyone have questions?
Cece, I know in our conversation before, I loved what you said about, kind of going back to the idea of starting with what you have and what you feel comfortable with. Because I know a lot of people that, it's like receipts in the shoebox, or, there are people that have created their own spreadsheets. And I loved that you said, just come to me with whatever system, because it needs to be a system that works for you. And I feel like that's such a great kind of thing nugget to start with in terms of just getting organized and best practices around taxes. I know that we have some questions that were sent to us beforehand. Should we, I guess people, if you'd like to drop a question in the chat, I'm happy to read them. If you wanted to message me privately, I'm happy to share them anonymously. So the first question that we got was from a writer who freelances, writes articles and books. So they receive 1099s. They say, I'm not an LLC and I don't get profits and loss statements or have a business account or card or anything, but I'm starting to wonder if I should. What would the benefits be of my becoming some sort of legal entity? It always feels like something, it feels like something I'm missing.
Great question. So the first thing I would say is yes, it is something you're missing. For the very simple fact that people always hear taxes benefit businesses. When you decide to become a business or you're offering services that mimic a business, whether you're receiving 1099s or, like I said, cash, the main thing you want to think about is protection. Protection in a few different ways, right? So you want to protect the thing that you're creating, but you also want to protect your liability in exchange for that creation. So whether it be books or some porcelain object, you want to make sure that it's protected and that it's also representing you in the best form, but you're also not liable for personal asset issues. So for this person who writes books, who does freelance work, I would say to get an LLC is the best step. It protects yourself from any kind of, you never really think that your words could really become harmful or become litigious, but this country is built on litigious behavior. They're built on people always wanting to sue for whatever. Oh my God, that book you wrote hurt my heart and it broke my heart and I really had a hard time and trauma with it. Fine. So now they're gonna sue, right? But if they're suing, they're not suing you, the writer, they're suing the business, the LLC. So when you have an LLC, you start to become a business, and a business needs its own account. It needs to be able to document expenses. It needs to be able to say that I'm the operator and the owner of this business, but I'm not still liable for all the things that may come about within the business. Those are great questions, but I think that for most people, the idea that you can be freelance and not be a business, like you can do both. You can still be freelance and have a business. Being a business doesn't mean you're any less serious than if you are just a freelance person. You still have the same obligation. The only difference is now you're protecting it, and you're also protecting yourself.
Right.
I hope I answered that okay.
Yeah, and then I guess they mentioned that they don't have a business account or have are doing any separate I guess in terms of bookkeeping and whatnot. I guess best practices.
Yeah, best practice is to separate the business from your personal expenses. But let's say, for instance, you know that what you buy for the business is so specific, it could never be a part of your household. So let's say you're buying tons of paper, you're buying binding materials, because you're also making your own books. If you kept it on the one account, but you're able to pull that out and to extract that data and put it separately on a sheet that you can now say, here, bookkeeper, here, accountant, or here, tax preparer, this is what I made for the year. And this is how I kept my records, because I can't keep, multiple accounts. Some people can't do that. And so for that situation, I would say it's fine as long as you're able to extract that data, because that's a part of your business, and being able to give that to someone who can then forward it onto the IRS, or you yourself do it. I don't think there's much harm in it, but I think the idea that people want to keep things separate is because of the fact that waters can get muddy between business and personal.
Right. Yeah, because essentially it's an organization. It's a tool for organizing, right? Like setting up a separate entity. You get an EIN for your LLC, which is separate from your personal social security number, which then allows you to open a business account, bank account, or have separate accounts that aren't linked to your social security number, but to this business EIN. So I like the kind of how it's just practical to have that separate in terms of bookkeeping, because I'm not that organized at the end of the day.
My mother didn't, people do things differently based on habits. So my mother did this, she made a savings account her business account. And because it was a savings account necessarily tied to a specific card or checkbook. So she knew that she could keep all the sales in there, and she could extract what she needed to purchase more things, because she'd have to go to the bank physically. And, so it was all in her name. But yes, when you structure a business and you go that way, you get an EIN number. That EIN number is almost like a social for the business. It can now live on its own, have credits. You can use that to get net 30s and the next 60s. You can build great credit with a business that can allow you to move better and to tribute and get more.
Yeah. So again, I guess it kind of goes back to start with what you have access to, and you can evolve from there. But it's a matter of keeping, knowing where everything is and creating those systems. Yeah. Okay. So we have another question. Should you charge sales tax on out-of-state sales? How do you know which states to charge tax? Do you charge sales tax for the state of origin of product, or do you charge sales tax to the state of the buyer?
Great question. I would say that answers both. So New York State requires that you pay taxes for the things that you are producing and that you're selling, right? So there's that piece. But then let's say you're going to sell something in your state to someone who placed the order in Texas. Now, the question is, how do you know that Texas is their home state? Well, you're going to go with the mailing. Wherever you're going to mail that item to, that's where you're going to be taking the tax bracket from. And so you would definitely want to charge Texas tax as well as New York State tax on that item. And not only because it covers you, but it also covers that person, because we all have to disclose all that at the end of a year. And so, intercommerce, e-commerce, as so they call it now, when you're doing all this stuff online, it gets a little muddy, but the way it clears is that by picking up orders or placing orders and then delivering the items, you get to know what state have what. So if I was that person, I would definitely be looking at every state and figuring out what the tax codes are in those states. Well, not tax code, tax percentages are, and keeping that in a document. But if you do a POS system, a good POS system like a Shopify or Stripe or Square, you can build those things in. You can take literally half of a day and put a tax bracket for each state, so that way when someone orders something from Massachusetts or from Texas, you can then now go in and apply it automatically. There's some places that say, like California, if you don't live in that state, you necessarily don't have to charge taxes for that state. So I would say that for any person that's going to do e-commerce business, it behooves you to do this practice and go through and check with states as you start to sell out in the world as to what the requirements are. Some states say if you sold 10 or more items in that state, not even physically being there, but physically sold 10 things in a state, you now have to create a business account in that state, like become a DBA in that state. So all these things are happening with e-commerce. Rules are changing, laws are changing. But I think for any person that's in business, it behooves you to kind of be abreast of the changes, to be in the know as to what you have to do and what you don't have to do. It's a lot of work. Businesses have a lot of work. We have a lot of things we have to do. But this just protects you to know what you need to do so that in the long run, you're not penalized, because nobody wants to be penalized by any state or the IRS. That's my answer.
Yeah, definitely. I know that using a system like Shopify, they have built-in tools that automatically calculate the tax for you, depending on where the purchase has been made. So I've found that very useful, and they are doing that work kind of in an automated way, which is very helpful. But yeah, it is interesting how, because world online is still very new, right? So I think that there are constant changes, and we will continue to see changes.
Sure.
So there's another question about, do you charge sales tax on a service?
So the service itself is, if that's your business, then yes, you have to. So I'm trying to think of a way. So like if you're a maker, and you make a product, based on specs given to you by a customer, you're actually providing the tax on the item and your service, right? It's going to be coming together, because when you sell an item, you're selling it based on the labor, based on the item that you're selling. So it all comes together and congeals into this thing. And I would say, yes, you should, and you have to. I hope that was clear.
Well, I guess, how does that work when, because with a service, like as a freelancer, we end up paying income tax, right? So, you know what I mean? Like, right.
The self-employment tax.
But that's, I guess, so you wouldn't be charging sales tax on your service, because it's a separate.
If it's a creation, if it's an item, a tangible item,
right.
Yes.
So but like I guess,
yeah.
Right. But in the case of like the writing for the book, which is a service, where there isn't a tangible object, you're charging for your time. You wouldn't charge sales tax.
No.
Sales is for objects. Sales tax is for objects.
Right.
So I think we answered the follow-up question. If somebody places a custom order, do you charge sales tax? So yes, on the product that is made, but not for your time.
Well, it's all the same. It's all within the same scope, because if it takes you 2 hours to make that's all included in the item. I'm sure nobody's going to charge something just based on the materials. You're going to charge for the labor as well in there.
Right. I think it also depends on how you present what the cost is to the client, because I see what you're saying, where if it's baked in, where you're coming up with this is the total cost to buy this custom thing that I'm creating for you.
Yes.
But yeah, if you're just charging for the service of creating something, you're not charging sales tax on the hours spent.
So the creation is like, let's say a drawing, you're saying, or like a markup, like what's that thing called? A draft of something that can be later on presented in a physical form. I would have to look into that, but I think you do, because I mean, architects do that all the time. That's their whole business, right?
Yeah.
And it is a tangible thing. It's paper, but it's still a real thing. That's a good one. I'll have to look into that one more.
Okay, great. Do you have a template you can share on best practices for breaking down your expenses and income? For example, I have multiple income channels: wholesale, direct web sales, in-person sales, custom orders, and service jobs.
So I would say that anybody who's in business and that's good at business has this thing where they have breakouts. One of the best ways I think you can do that is by structuring your POS system to be the thing that can now break out those reports for you. So like in my POS system before, when I was doing laundry, I had laundry that was done by the pound. I had laundry that was done by bulk. I had laundry that was done by the piece. And so within each of those items, it was structured in such a way that when it was time for me to figure out, or let's say I was going to go into maybe getting a loan for something for like a dry cleaning machine, and those items are by the piece. I had to account for how much money was my dry cleaning, a loan business bringing in that would justify or quantify me needing a loan. And so my POS system was built in that way so that I could look at just the piece items that were dry cleans. So I would say that would be the first step, is to just use your POS system. And if you don't have a POS system, like a Shopify or Stripe or Square, you can definitely do that through a spreadsheet. QuickBooks does have it, but it's not free. I feel like you can do stuff on your own with Word or with Sheets that can actually give you those. And it's going to take more time. You can also probably maybe find a bookkeeper who's interested in doing that kind of work, setting it up, and then you can create a template for you, and then you can go forward. I myself don't have one that I give people. The only one that I have that I've given out is the startup spreadsheet. And that's basically going over all your expenses, your gross income sales. So no matter where your money's come from, the gross sales of that, I've created a sheet that does that, but I haven't gone into breakouts. But again, like I said, you can use your POS system to do that.
Right. So in a very, like the most basic, I guess, version would be adding up everything that you spent money on, and adding up all the money that the income that you've created, and having those in one place. Like this is the most, if we're starting like creating our own, we're just trying to collect all our expenses and then collect all our income. And then hopefully there's a positive number when you subtract from the income, your expenses from the income. Yeah.
Yeah. And then if you wanted to go a step further and like, say you had to have sales attached to certain things that were, like in this case, if you had sales that were in store as well as online, then you definitely want to make sure those are separated out, because that's going to have a different pool of money. You're going to even want to maybe create another bank account specifically for out of state taxes, so that when it's time to pay it, it's already in there, dumped in there for you to be able to do that.
Mm-hmm. Yeah, that's a tip that I remember, like when kind of monthly or quarterly pulling out sales tax aside, so that you have the money when that quarter at the time of each quarter when you have to pay them, whether it is a separate bank account or kind of making sure you have that. So it sounds like for this person, wholesale, direct sales, just, I guess, reporting would happen in a POS system. So if all those sales channels aren't coming into the same POS system, maybe if there's a way to set that up into the POS that you're using, so that you can compare all those numbers, that might be helpful.
Absolutely. Or you can just enter that data in there manually if you have to. Yeah.
Yeah. Okay, another question we have is, what are some things we should be aware of in terms of stimulus income, either PPP or special gig worker unemployment? Is there any clear guidance around that? I know that that was the question I had.
Yeah, so there's some good news on the unemployment front, which is now the government has just passed a rule that says the first $10,200 of unemployment will not be taxed. So if, there's some people that received a significant amount of unemployment because you have the cap, which is I think $402 in New York State. Then they had the $600 that was coming in. So you're talking about $1,000 in a week for 4 weeks, 4.333 times 26 or more weeks. That's compounded. That's over $15,000 easily, right? So if they take away the first $10,200 and you forgot to take out taxes, now you don't have to pay such a hefty lift when it's time to do your tax return. You don't have to pay maybe half or less than half if you made a little bit more over than the $10,200. As far as the PPP and the stimulus monies go, there's no you're not paying back any stimulus money. That's not happening, and which is a good thing. And a lot of people were worried about that. They were like, I'm gonna have to probably pay this money back. Can I say I don't want it? And it's like, no, don't worry about it. You don't have to ever pay that back. They just want you to declare it when you do file your taxes. So just say, hey, I did receive my stimulus and this is how much I got. Because some people actually were undergiven. So let's say they had a dependent that they claimed, but for some reason the IRS only gave you the 1,200 in the first round and not the 1,200 plus the 5. You have the extra 5 just hanging out there. When you go to file your taxes, that's going to come to you as well.
Mm. Yeah, and then I guess there were also, I mean, we received an SBA loan, an injury or disaster loan. I guess we just need to report those things, right? There isn't anything else that to note for tax season this year.
When with those loans, you want to report it, but you also want to report when the interest is going to be start being paid again. So if you've got a break, almost like a student loan, if you don't have a document from the bank that's telling you that you need to file with those documents that the bank submits to you, that's the best practice. Anything you get in the mail related to your tax returns, you want to give it to your tax preparer, or you yourself want to go ahead and make sure you add those in the areas that they belong to. And tax documents have gotten pretty savvy lately, so now they're accounting for a lot more. They've broken out the 1099, the infamous 1099 miscellaneous MISC, and they've now added a 1099 NEC, which is great because the 1099 NEC is actually more prevalent than the 1099 MISC, which is for non-employee compensation, and that's like subcontractors. Those are freelance people. Those are gig workers. So those people are now getting that kind of a document, and all those things again you would give to your tax preparer, and they would file those accordingly. And most of it is reporting. Some of it they're not doing anything with because it's not time. The government's been really lean. Yeah.
So the NEC, 1099 NEC is a new tax form this year?
It's pretty new. Yeah.
Okay.
Yeah. You've heard of it?
No, I haven't. That's why I was like,
yeah.
I
The
don't
non-employee compensation form. Yep.
Yeah. Another question is, what action would you recommend a business owner take if they sold a piece to an out-of-stater and didn't charge a sales tax?
Oof. Been there, done that. So I would say, unfortunately, you might have to bite the bullet on this, but there's also some other way. I mean, because like you're going to declare this income, right? And you have to. And I practice tax avoidance. I don't practice the bad kind. So you may have to bite the bullet and pay those taxes, but it's a learning lesson. It's going to teach you to not only take a minute before you go into business, but it's also going to remind you of what your obligations are in business. And this is why most people do get a POS system that helps them guide them along the invoicing process, because in the invoicing process, it actually asks you, do you want to take taxes off of something, or do you want to apply taxes to something? So it gives you that reminder. You can definitely reach out to that customer. I would. And I would just say, unfortunately, when I sold you this item, I wasn't able to collect taxes. Is that something that you can remit to me now? And I would do it kindly, because people, they get a little, and so they should want to do that as well, because they also have to declare that they bought something out of state. So it works both ways, because if they didn't pay you the tax, now they're going to have to pay double tax on their end. So they want to pay you the taxes, actually.
So basically, yes, you would basically, if you didn't want to reach out to the customer, you would basically be paying for the tax, sales tax.
Yeah, you'd be paying it yourself. And then again, that's something you can actually write off. So as you're going through and your expense sheet and Schedule C, they have commissions, fees, taxes paid. This is one of those areas where you can add that into that. So even though you paid it, you can write it off.
Yeah, I think the way that I've kind of framed it when I've been in this situation is I'm essentially giving this person a discount that they don't know about, because I'm basically paying that sales tax. So that's minus from my income, but I'm thinking about it as like they got the discount of the 8% or whatever it is, wherever it went.
That's exactly right. Yep.
Another question is, what is your guidance on accumulating bad credit for a business? Is it a myth or is it real?
It's real. It's real. It's so real. Duns and Bradstreet and Equifax, and there's only a few that actually report on business credit, but it's real. And it can prevent you from moving your business on. But here's the good news. You can close a business. And I'm going to give the worst example ever, but it's the most real example. Donald Trump. Donald Trump has probably opened and closed more businesses than the world will probably allow. And one of the reasons why he did this was because sometimes the businesses are going bad. And so you would just simply close your LLC, you would close out your EIN, and when you open up a new LLC, it generates, you would also apply for a new EIN because the business would be new. Now, ideally, you're not going to go exactly into the same business you went into before. There's so many different structures of business now. I was just in it today for a customer, and they do a specific thing, but it's on the line of personal service, right? So they did a personal service business and they closed a business that they had before. Now the personal service is under 99999, which means it's just other. And then the IRS will ask you, what exactly is it? Well, before I was doing makeup, now I'm just doing lashes, right? So it's still in the same field, but it's just a different field. So you can definitely close a business and start again. But I would suggest that anybody who has bad business credit, in the end, you should still try to get on some type of a payment arrangement with those companies and try to clear down and break down the debt as much as possible.
And I guess, how does one start credit for a business?
Oh, so once you have your EIN, you would go to Dun & Bradstreet. I think it's dnb.com, and you would register yourself with your EIN, your business name and your EIN. And then from there, you could open up a few different accounts, and they're called net 30s, net 60s, and net 90s. And basically, the net 30 is the level that most people are on when they first start a business. And the net 30 basically is invoicing for 30 days. You'll see this in like a Staples, Quill, Granger. There's a Uline. Uline's a great one. So most businesses need cleaning products. They need paper. They need office stuff. So you opening up an account with Staples, opening up an account with Quill, opening up an account with Uline, opening up one of those accounts is going to give you a net 30. And what it does is it says that you have now established business credit. Now you would hold on to that for like 3 to 6 months. You make some purchases on it. I think Quill is a $100 minimum for the first order for your net 30. You'd pay it off in 30 days. You actually want to pay it off maybe in 25 days. And you do this constructively. And as you do it, they report your EIN to Equifax, to Dun & Bradstreet. So now you're building credit, right? You also want to make sure you have a separate address from your business, from your residence. You can't have it in the same. You can do that by simply getting a virtual box or a POS box with post office, with the, what is it called? That delivery service. It's right on Fairview. What is it called? I'm blanking
UPS?
here.
UPS?
Yeah, well, yes, UPS. You want to get a virtual mailbox. And so you create an address there that can forward your mail on, but it creates a separate address from your home. You also want to have a business phone, and you can have a business phone line in a couple of different ways. You could physically buy another phone, which is a little expensive. You could tack on another phone on through Google Voice onto your main phone line, your cell phone line. You could buy one through Grasshopper. Grasshopper is great because it allows you to have like dial 1 for Stella Yoon, dial 2 for, so you could have like extensions within it. And it's $35 a month minimum. And those services also are tax write-off. So, all these things that you have to now buy to kind of stay in business and maybe do business are a little expensive, but you can write those off at the end of the year, especially if your business is successful, right? So that the whole game is to kind of reduce your tax liability. So all the things you spent money on, all your expenses, you put those back in so that the government can say, well, you made $50,000. Well, actually, IRS, I didn't, because I spent, $400 on this, $200 on that, so you bring down your tax liability with your expenses. After your net 30, you would go to a net 60. And this is where it really gets interesting, because now you can get a gas card. You can get an American Express card. You can start to build up more credit that's going to allow you to like really move around as a business person. And these won't come in your name. They're not using your social. They're using the business EIN. And that's something that you have to have. I would also say to anyone who's going into business to make sure you file, go to tax.newyorkstate.gov to make sure that you apply for sales tax, because those are quarterly payments that have to be paid. If your business qualifies for that, not every business is required to do that. And that you also make an attestation for workers' comp so that if you don't have any employees underneath you, you've already taken care of that. Businesses have a lot of steps, but most of these things are solved in like 10 or 15 minutes.
Yeah, and I think, did you just mention sales tax either being paid quarterly or annually?
Yeah.
I think basically, I can't remember what the amount is, but it's based on the annual, if you pass a certain amount that you accumulate, you're required to do quarterly, but otherwise you could be paying it annually if it's under that amount.
Right. So if it's a certain amount, you don't have to pay quarterly, you pay annually. But once you get over $600, your best bet is to just go ahead and pay quarterly, because what it's going to do is two things. It's going to make sure that you've already paid the government, so they can't come after you, you know, at the end of the year, the beginning of the new year tax season. They can't come and say, hey, you didn't pay your self-employment, you know, you didn't pay your taxes. You quarterly, you get to see where the business is at. So I remember with my first time paying a quarterly tax, and I think I had income of like, in the Washington folder, I think I had like $1,500, and you know, I went to pay it, and it was like maybe like $75 I had to pay, and I paid it right then and there. And then you get a printout and you just file it away, so that, you know, the next quarter you can do the same thing again. And the quarters are January to March was to April. I had this written down earlier. I don't know why I don't have it now, but there are 4 quarters, but it kind of breaks out into 3, because one at the end of the month, you kind of, December kind of runs into January.
Yeah, it's funny the way that it's broken down. I set a Google calendar reminder a week before they're due. So I just got a reminder today. It's, I think, due March 20th is the next quarter of sales tax due. So I don't know the dates either. That's why I just program it into the calendar. Hot tip. And you can just have them repeat, because it's just easier to have it remind you. Okay, so we have a question about how to structure an LLC when you also have a day job. This person's getting paid via W-9, but also starting a business. Do you start multiple LLCs? You know, what do you do?
Good question. Good question. So I would say when you go in to initially start your LLCs, you should definitely do this. There's a New York State has a great website for businesses, and it's called business. Oh, I had it somewhere. It's a business a website, and what it basically does is it's asks you a few questions. It's about 10 minutes. It asks you, what is the nature of your business? Once it asks you what the nature of your business is, it goes into asking you different components and fields. And I'll do that right now. So say, for instance, I'm going to go into the tax business. It would ask me, what kind of finances am I going into? Tax business. Okay, is it tax audit, or tax repair, credit repair, or tax preparation? It would ask all these questions to get you to the end result, which is a checklist of things that you have to do to get your business up and running. For LLCs, you would go to it would actually put it all in a printout for you. I wish I had it. Actually, I do. One sec. Okay, I'm back. I have it. So it's a business wizard. And so basically what it does is it walks you through all the steps of a business checklist based on your area and your field of business. And it's New York State formation is pretty simple. LLCs are done with a DOS 1336, and that's at the www.dos.newyorkstate.gov. And that's going to allow you to form your business, right? And so when you do it, it literally takes 2 minutes. You're going to come up with the name of your business. And before you even actually do the LLC, you want to do a name check. You want to make sure that the name of the business that you're going into isn't taken, because that's a thing, right? The first time I went to do a DBA for myself, I had to go into the county clerk's office, which is behind the DMV, and I had to look through all these books. And after I looked through like 3-4 books, these are huge old leather bound books. Then they said, oh, you're done there? Okay, now you got to go to the computer and type it in the computer and see if, you know, if anybody in the computer recently has done it. So the LLC formation is really easy. It's $200. It's $5 for a name hold, because in the process of getting your LLC, it's about 120 days. You have to file your name, file your business organization, LLC single member or LLC multiple member. Once you do that, you're going to pay $200 to the state, and then you're going to now get this document. After you get that document, you're going to have to do a listing in a newspaper, a weekly listing and a quarterly listing, something like that. Once you do that, technical difficulties, I have kids. Once you do that, you would also go ahead and apply for your EIN. You can do all of this in a matter of one day, literally not even, maybe 2 hours. And doing that is going to save you a bunch of money and time. You don't have to you don't have to pay an agent as a service agent. You can literally, like I said, get a virtual box and just have all your business information go there. Sorry.
No worries.
Sorry, that was a 3-year-old. Okay, thank you. Okay. Yeah, real life. So again, the LLC can be formed in the same day. Some people charge a service fee of like $40 to do all this for you. It is a little bit of work because you just have to know how to do everything and you have to work with the system. But once you get it going, it is so easy. You're like, I can do 2 more LLCs today. You're like, hello. And it's actually probably easier than doing a DBA, because to go into the county clerk's office and go through all those books, forget about it. They can keep it.
Yeah, and I actually don't know, because with COVID, like in terms of the office, if we'd be able to go in right now.
Yeah, you can go in. The
can.
DMV is open, and the Holly Tanner's office, the county clerk's office is open, so you can go in. They're just limiting the numbers. When they have a COVID outbreak, they close. They have to wait to 15 days, and during that time, you either can make an appointment, or you can probably do some of it online, but not all of it. You still have to go in physically.
Yeah, and I mean, it is very simple. I know that the checklist seems long, like just hearing it, but I think, Cece, do you have you had mentioned the website, right?
Yeah, I can drop it into the chat.
Okay, cool. It sounds like is the county clerk's office closed till the 19th right now? Someone is saying.
They had another outbreak? Wow, okay.
Yeah. Okay, so another question we have is, how many years do you have to make your business profitable before the IRS considers your business a hobby? If the IRS
3 years. 3 years, that's all you get, folks, 3 years.
If the IRS considers your business a hobby, does that mean you have to shut down? Does the IRS consider you a business if you break even every year but don't make a profit and don't go into debt?
Sorry, I didn't hear that question. It's not really that they shut down your business, but what happens is you're not really able to monetize off of the tax breaks and benefits that a business would get. You know what I mean? Because you can still be listed as a business, but the whole premise is that you're in business because you're making money, right? And if you're not making money, then it's like, why would you still get those benefits? Because the tax bracket is built for businesses, unfortunately. So you wouldn't need to itemize anymore. You wouldn't need to, unless your expenses were so big that. But again, in a hobby, you can't really itemize your hobby. You can just kind of you're gonna have to just take right.
Well, I guess the IRS doesn't really determine if your business is a hobby or not. Maybe that's like a self-determination, but
also I feel like noise.
I guess.
What did you say? Someone said something.
Oh. Sure. But yeah, I guess the IRS just looks at whether there's income or loss, and then they want to see the 3 years you're saying pertains to consecutive loss. Is that right?
Yes, consecutive loss, or 3 out of 5 years. So within a 5-year period, it's you have to have income.
So whether that's a profit or breaking even, I think it's a matter of loss versus a negative number versus like a positive number.
I mean, I've never met anyone who's actually had a business go into hobby status, but I imagine that it has to be pretty, consecutive for it to be pronounced that way.
Okay, so just to clarify, when it's a loss of certain tax breaks, and when they kind of categorize it in that way.
Sorry, Stella, what did you say again? My screen froze a little bit.
So kind of the hobby status is a loss of certain tax breaks. Is that?
Yeah, because the Schedule C. The Schedule C is specific for businesses, and so if you're classified as a hobby, initially you would get a letter, and it would tell you that I mean, this is what I've read so far in my IRS training and stuff, but they would send you a letter and let you know, and therefore going forward in preparing your taxes, you wouldn't be able to benefit from that Schedule C, which, as we know, is where you dump all of your expenses.
So you can stay in business and still do what you're doing. is the good news.
you just I mean,
yeah.
I mean, or you could restructure, right? You could think about maybe restructuring, and maybe figuring out what part of the business works and what part of it doesn't, and maybe scale back or go the whole hog. Sometimes I think people feel like because they have a W-2 and then they have this other thing that they do that they love, that the sacrifice is too great. But I think you have to speak life into your business. I think you have to make a promise and a commitment to it if you really believe in it. Because it's not easy, right? And I mean, we hear the story about a lot of businesses who are huge now, like Colgate. Colgate, I think, was in business for like 10, 15 years before he even made a profit on the toothpaste. I mean, that's a lot of commitment. That's a lot of time.
Yeah.
And he was also perfecting his recipe. So, yeah.
I mean, let's talk about profiting. Like, I think Amazon was started in debt. Like, basically they were selling books at a discount and didn't make a profit for at least the first 10 years or something like that. So yeah, it takes time.
Right.
Okay, so
I'm writing it in now.
Let's see. What are some examples of a restructured business? Like, or how, like, is there like an example that you can think of, CC, where somebody might restructure?
There's a few examples that stick out. So if a person had, what was that one example we learned in school? Give me a sec here. Because restructuring, a part of restructuring is not only what you do physically, but it's also how the government sees you. So a restructuring could be going from a DBA, sole proprietor, to a LLC, single member still, but now you're a little bit more protected and you're separated. Your personal assets are separated from your physical assets. And let's say before you were just kind of like doing pop-ups, and now you actually have a brick and mortar. That's a restructuring.
Okay. So I think we were gonna do this for about an hour, and it's a few minutes to 7. Are there any last minute questions?
Ooh.
Did I miss anything? I was keeping an eye on the chat. It was pretty active. Thank you for all your questions and submitting them ahead of time and coming with them. Does anyone else have any questions? Is there any topic that you'd like us to talk about? We kind of chose taxes because those are coming up, but we're also very curious about, or I'm also very curious about what's kind of top of mind, and let's demystify some of these topics around money and finances.
Yeah, definitely. I think people tend to think that when you're in business that you can't, like we just talked about with restructuring, that you can't close a business when you can close a business and you can open another business, or you can have more than one. Like for me personally, I usually do about 3 or 4 Schedule Cs a year. And, I have 2 LLCs and I have 2 DBAs. So it's like, as long as you can keep all the books straight, you're good, and you can only take one write-off on your office. You can buy a car in your business name, but I wouldn't. I'd probably buy it in a trust more than in an LLC to protect it a little bit more. There's a lot of things that are happening around business now, which make it really exciting, but also really daunting. I mean, so much information is out there now that people should definitely do due diligence and do homework. Even from the things I've said, I have to double check myself and make sure, because things change so fast. At the beginning of this year, they weren't giving 100% on meals, for instance, for businesses. They were only doing 50%. And now they went back and changed the law, and now it's 100. So for some businesses that actually did their taxes in January, now they're amending, because now they can actually write off the whole a lot of business meals that they took and a bunch of other things. So, I mean, I know that jumping into taxes, you want to get it done and get it over with. You're like, all right, I've got everything here, do it. But, sometimes taking a heel and just kind of holding on, because the government's always shifting. There's so many moving parts, especially when an administration changes. There's so many tax law changes that are happening right now that it behooves people to just take a minute and just let them do what they're doing. Because I have 4 amendments scheduled for this week alone, and all of it is centered around unemployment, which is great. If people don't have to pay, why let them pay? Yeah.
Yeah. I guess, just to kind of start wrapping things up, I am happy to continue to have these conversations. I would like to help facilitate more. I think the more we talk about money and finances, it's such a fraught, it's a hard topic to talk about, but I really would like to help normalize being able to talk about these questions and not feel so vulnerable when doing so, because we all need money. This is something that we all deal with. So it doesn't have to be so scary all the time. And I think talking about it really helps normalize. So please feel free to reach out to me via Hudson River Exchange. We're on Instagram and Facebook. Please check out our online shop and support Hudson Valley makers. We're representing 30 at the moment.